Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, October 30th, 5:30 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Want to again thank everybody that is subscribing to and liking the videos out there on our YouTube channel. Appreciate it very much, helping get the word out to that you don't have to be a slave to the market. With a couple of common sense rules, you can identify a risky market versus a healthy market and take advantage of that knowledge. So what happened today? Actually, state of the market. Don't want to get ahead of myself here. Still in a moderate correction, slightly less than 10% off the late July highs. You can see over here on the trend gauge, red arrows dominating from a leadership standpoint. Downgraded over a week ago. Short term, the five major indexes are trending below their declining 21-day moving average. Same thing relative to their intermediate term 50-day moving average. Mixed bag on our long-term trend line. NASDAQ 100 is still above the 200-day moving average. The four other indexes trending below. So what happened today? We knew it was coming at some point. You can't go down forever. And the rubber band just got stretched a little too far to the downside. So broad oversold bounce today. Day one off the lows for four of the five indexes. Day two for the NASDAQ 100, as it did not undercut on Friday, mostly due to the strength off of Amazon's earnings. So QQEW did undercut, so maybe a little bit of an asterisk there on the NASDAQ 100, but we count it nonetheless. So here are the numbers on the day. Big seven would have been a lot higher if it wasn't for Tesla being down 4.8% on the day, but the big seven up an average of 1.16%. On semiconductor, ticker ON, down 22% on earnings. They're a silicon carbide producer, and they warned about slowdowns in the EV space. Not something a Tesla stock owner wanted to hear, and that big drop on ON trickled over to Tesla. RG8, our 8 growth ETF composite, not impressive, up 0.54%. S&P 500 gapped up 0.7 at the open. By the end of the day, up 1.2%. NASDAQ 100 also gapped up 0.7, ended up 1.13%. Dow up, that's not correct. The Dow, no, it was correct. The Dow leading the way, up 1.58%. Midcaps up 0.78. Russell 2000 up 0.63. Global Diversified 60/40 up 0.58%, still dragged down slightly by bonds, which yields ticked up a bit, meaning prices down a bit. In-house GROTECTION, we took advantage of the bounce to close out the rest of our long position. We actually closed Friday slightly more than 2 ATR below the 21 and used the bounce to exit that. We have no long stock positions, and that's why we lagged on the day. We strong market day. Also, our other positions that we have, non-stock positions, we've got gold, commodities, and we added a small Bitcoin long today. So we'll review those when we get to the tail of the tape. Let's get right into it. Start off with the S&P 500 here. You can see this is a pseudo Morningstar pattern, not perfect, but that's a pattern to where when you get stretched to the downside, you reach a low, you just can't go down any further. We reached that low slightly off the bottom on Friday. You can see the follow through to the upside today. Let's take a look at this on an intraday chart. So here's the gap up, and slightly, like by 10 o'clock, we were up 41.64. And then the sell-off happened when we started to bounce. This 41.50 area was initially acting as resistance. This is where we got out of our SSO long. Later in the day, we broke through that level and made some more progress. But if you pull it back, look at a 30-minute time frame, kind of into a still short actually of filling this gap and short of this 41.89 level. That was the shakeout low recently. Not until we get above 4,200 would we start considering, uh, and this is the toughest part of downtrends, is recognizing the shift from when do you sell or exit longs when you're bouncing versus really start to consider getting into some long positions and holding them. And the first thing we're going to do is use the O'Neill methodology, 4-day off the bottom, looking for a follow through day. And along with that follow through day, you've got to have some leading stocks with good fundamentals breaking out of bases or starting to form or finish up the right side of their consolidation. So that's the not double-edged. That's the double barrel approach that we are taking. But for now, haven't even pierced the declining 8-day moving average, let alone start thinking about piling in to the long side. I guess on the plus side, we're above that 41.55 level and that volume shelf that we talked about in the podcast on Friday. So we'll count some small victories there. Let's go to the NASDAQ 100, rallying up into, you can see this big 350, 349 to 351-ish level, some resistance there. We're just coming up into it. This could very easily be a bear flag, as it could be an attempt to come off the bottom. We'll see when we meet up with the declining 8 EMA tomorrow, who wins that battle. Dow Jones Industrial Average, nice bounce, obviously, into the 33,000 level. That is support flip to resistance. So if you're a bull on the Dow, you want to clear that level. Also stopped right into the declining 8 EMA, 8-day exponential moving average. Mid caps, an inside day, but off the bottom. Hey, we didn't make new lows, so we got that going for us. IWM, same thing, basically an inside day bounce off the lows. VIX came off quite a bit today, down 7.15%, back below the 20 level. So that's a positive for the market. Let's go to the dollar, UUP. Second day on this pullback after it challenged the top of this handle and the cup and handle last Thursday. Still above the 21-day exponential moving average. A break of that 21 would be a change in character. Look how we've been riding that green line higher going back to late July. That would be another feather in the cap of the bulls, and another check mark that would make us again consider, do we flip to the long side, or do we look for right now shorting weakness into resistance, or can we combine some of these things that have been a headwind for stocks, combine them with a follow through day and start looking for leadership possibilities. Let's go to the precious metals now. Dollar down, but gold down also after a big day up on Friday, and it's holding this double bottom base breakout attempt. GLD definitely want to see this hold the 8 EMA on any pullback to keep that strength intact. Gold stocks down also today, down 1.47%. They're putting in a little bit of a handle after their bounce off of their prior lows. Silver was higher today, 0.76%, but couldn't quite close above the 200-day moving average. Bitcoin, we took a 2% position in BITO today after the gap up. And then the follow through to the upside above this double bottom base, very normal to test right around the top of the pivot. We had a 2-day pullback, more strength in this today. We bought it right around here, high 17, mid 1740s. So up a few cents on this right now. We'll keep an eye on this. This is a strong looking pattern. Whether or not it ends up turning into anything, that's a different story, but it's not something that's tied to the market. It's been acting independently of stocks, as you can tell by this big relative strength move higher. So certainly a place to take a shot, and not doesn't seem to be affected by the headwinds that are hitting the overall market. Let's flip to bonds now. We'll start off with BND, the broad bond index, down slightly, down 0.24% in this tight week and a half range here near the bottom of the overall range. That's BND TLT. This is the long bond down 0.45%. So yields up a little bit today, but at the bottom of the range. There's some bond funding that's coming out this week that we need to keep an eye on. Bond selling to fund the government is what I should say, but this is looking like a triangle here. Let me draw it out. Declining top, rising bottom. So a symmetrical triangle here. So we want to keep an eye on a break from this one way or the other. TNX, the 10-year. Also consolidating more of a descending triangle than a symmetrical triangle. So that's our inter-asset correlation. Let's go to the tail of the tape. You can pause this. I'll hit the highlights. 2 o'clock Wednesday, FOMC, there's a 99+% chance of no interest rate rise is what the markets are pricing in. We don't want, Jerome Powell does not like to roil the market, so kind of count on no interest rate increase happening. Again, they can only control the short end, the Fed funds rate. The long end is what the market is determining right now. 7 out of 8 days down. We got 1 day up off the bottom now, 2 days if you're counting the NASDAQ 100. Still the 9th day below the ADMA and the 21A as part of this third wave down. 11 out of 11 spider sectors up today. Also Bitcoin and transports. On the downside, the dollar, semiconductors, that ON semi. Let's take a look at that chart. This is a former leader. This is why you don't hold on to broken leaders. And the number one rule is a big break of the 50-day moving average as part of the O'Neill methodology. It's not only broke the 50, then it broke the 200-day moving average. There was no reason to be holding this. If you're a growth investor in the O'Neill methodology, there was no reason to be holding this. And that, of course, trickled through, as I mentioned, into Tesla, which made lower lows, now below its 200-day moving average, really the worst looking of the big seven. Semiconductors, gold and gold stocks. Okay, so what do we do? I mentioned closed SSO, gold, broad commodity index, PDBC, and Bitcoin. Those are our three holdings now. We looked at the gold chart. Let's look at the PDBC chart. This is dominated by oil and then a bunch of other commodities, but in this tight consolidation, not going to give this, I'm going to keep a pretty tight leash on this as this move up off of this consolidation, but the power of three, we got the 8, the 21, and the 50 right there. Big move up on Friday, disappointing move today, but there was oil pulling back. Who had oil lower on their bingo card than the day? This was the day of the initial move up on the Israeli-Hamas conflict, and oil took off to the upside after that, but now pulling back and actually below the close on that day. Very, very surprising. Same thing with the broad ITA. Here's where we closed that day. ITA is the Aerospace Defense Index. We're below there. We took a shot with this, and when it took our 0.1% versus the overall portfolio loss when we broke back below it, but market never ceases to amaze. When you think 1 + 1 = 2, the market will tell you it equals 3. Let's see. So exposure very low, 0.05% with this below the 200-day moving average. Bottom line of the day, broad oversold bounce, but it's day one or day two off the lows. Now we look for clues of continued strength to see if this move off the lows might be anything worth watching. Let's take a look at some recent leaders, and a lot of the 2121 stayed on our leaders list, even though they broke the 21, as they're fundamentally sound. They were just caught up in the pullback with the market. And if the market rights itself, this will be one of the first places that we start reallocating capital. CrowdStrike is one of them. Then we look to some things that are reacting good off earnings. And I mentioned Netflix. regaining its high volume close from the gap up day on earnings, holding this 400 level, spent 1 day below it. So good action today on Netflix. Amazon follow through after its good earnings report, clearing the 21-day and the 50-day moving average. Certainly showing some relative strength. You can see relative strength approaching the new highs well before price. That's something key that we look at, and by all measures, Amazon's earnings report was very strong. Microsoft initially had a strong earnings report, sold off the next day, gathering some steam, held the 21. That's also on our watch list. And Deckers following through on the big gap and breakout of the flat base. Consider this the canary in a coal mine now, with a well-formed base, a breakout before a follow-through day, and a day two higher high. We're keeping a close eye on this. They've got good fundamentals, uh, good sales growth, good earnings growth, and popular products. That's a pretty nice, tight 15% base during a bigger market pullback. Very nice breakout with volume. Day two higher high. This is the type of thing we're looking for if we decide to put money to work. That's going to wrap it for today's video. As always, love to hear from you. I answer all the comments on YouTube. But if you want to email me, it's don@revereasset.com. If you're interested in becoming a client, Dan Stewart, my partner, would love to speak to you. It's dan@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. Also want to show you this spreadsheet from our weekend sector work. Everything that's marked in pink has less than 15% of the stocks in our liquid universe. We screen for $40 million and above. That gave us 994 stocks, only 89 of them above the 21 EMA, only 129 of them above the 50-day moving average. So some really ugly sectors here. The only sector reasonably strong is energy, and that lost half of the number of stocks that were above the 21 and the 50 this past week. So even energy weakening, but not a whole lot of good going on here. Retail with 13 stocks out of 89. Very difficult, still only 14.6% of that 89, but some decent looking charts in there as some retail stocks such as Deckers have been holding up. But this is just some of the worst readings that we've seen. So really no surprise that we're bouncing. It's the quality of the bounce that we need to focus on. And as I said, it's not how much you make for right now under the 200-day moving average. We're more concerned with how much you can keep. And with that, I'll wrap up the video for Monday, October 30th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.